Good morning and welcome to all our viewers across the world watching the Economy and Politics show, which is streaming on WebTV. Today, Tuesday, August 25, 2020, we continue our conversation on political economic activities in the country as it affects the citizens. Today, we'll take a look at the oil and gas sector, and what better way to approach it than take an insight from the latest second quarter 2020 gross domestic product report on Nigeria's economy, which yesterday was released by National Bureau of Statistics and showed that the country contracted by -6.1%. Well, let's begin with what to look at for this program. We'll bring you the update on the second quarter of 2020 Nigeria GDP report on the oil sector, an analysis on the petroleum industry bill, and some oil and gas updates that you would like to hear. And so let's begin with the GDP second quarter 2020, which of course I earlier said that Nigeria contracted by -6.1%. Yesterday in interactions in our program, where we had a guest, it was agreed that across the world it has become a trend of contractions or recessions. Two economies currently have posted a recession that we know of, Japan and the UK. Both countries are in the G7 group of industrialized nations. From the latest report, we look at the oil sector. The oil sector has always been a driver of Nigeria's growth. So in essence, Nigeria's steady growth since its last recession in 2016 was driven by the oil sector. But this time, the oil sector didn't come to the party, it couldn't deliver, and that's why we experienced a contraction. Let's begin with the fact that the oil sector second quarter of 2020 showed an average oil production of 1.81 million barrels per day, which was recorded during the period under review. This was -0.21 million barrels per day lower than the daily average production of 2.02 million barrels per day recorded in the same quarter of 2019, and -0.26 million barrels per day lower than the first quarter of 2020 production volume of 2.07 million barrels per day by real growth of the oil sector. The oil sector in terms of real growth was -6.63% year-on-year in second quarter of 2020, indicating a decrease of -13.80 percentage points relative to the rate recorded in the corresponding quarter of 2019. Growth decreased by -11.69 percentage points when compared to first quarter of 2020, which recorded 5.06%, which was a bullish growth and a factor for Nigeria's positive growth in the first quarter, which was 1.7%. Quarter on quarter, the oil sector recorded a growth rate of -10.82% in second quarter 2020. The oil sector contributed 8.93% to total real GDP in second quarter 2020. That's something for everyone to note. Down from figures recorded in the corresponding quarter of 2019 and the preceding quarter, where it contributed 8.98% and 9.5% respectively. Let's take a look at the oil sector contribution to GDP since the fourth quarter of 2018. In the fourth quarter of 2018, it contributed 7.06% to total GDP when it was reviewed by the National Bureau of Statistics. First quarter of 2019, it had 9.22% contribution to the country's GDP. Second quarter of 2019, it had 8.98% contribution to the GDP, while third quarter 2019, 9.77%. Fourth quarter of 2019 had 7.32% contribution to GDP, while the first quarter of 2020 showed 9.50% contribution, and the current quarter, which we are in, second quarter 2020 review, showed 8.93% contribution to the gross domestic product. Let's look at oil production in Nigeria since second quarter of 2017 as we review our growth rates. In second quarter 2017, the total oil production at the period was 1.87 million barrels per day. Third quarter of 2017 was 2.02 million barrels per day. The fourth quarter of 2017 was 1.95 million barrels per day. First quarter of 2018 was 1.98 million barrels per day. Second quarter of 2018 was 1.84 million barrels per day, while third quarter of 2018 was 1.94 million barrels per day. In the fourth quarter of 2018, we had 1.91 million barrels per day production. First quarter of 2019 had 1.99 million barrels per day production. Second quarter of 2019 had 2.02 million barrels per day production, while the third quarter of 2019 had 2.04 million barrels per day production. For the fourth quarter of 2019, it was 2 million barrels per day production, while the first quarter of 2020 had 2.07 million barrels per day production. And the current production in terms of review for second quarter 2020 was 1.81 million barrels per day. So it shows you the curve of how production has grown in the country. And this again speaks to the oil sector, the need for us to have a diversified revenue base, because from what we've read in the contribution to growth, we can see that the oil sector, in terms of analysis, has not contributed even up to 20% of the GDP. Yet, it's still the driver of growth and the major oil revenue earner for the country. Indeed, we need to diversify from crude oil dependence to the point where the non-oil sector, who contributes the huge chunk to the GDP, also translates that in terms of the revenue and the impact on the economy. One area that we can see great prospects and transformation in Nigeria's oil and gas sector, which is the golden geese so far, is the Petroleum Industry Bill. A latest analysis shows that, according to analysis, the highly anticipated oil and gas reform bill, according to media reports, had been presented to the president soon. This was a commitment by the 9th National Assembly, chaired by Senator Ahmed Lawan. The Petroleum Industry Bill, which was introduced to the National Assembly over a decade ago, was aimed at overhauling and strengthening the regulatory framework governing the entire value chain of the oil and gas industry, at the same time promoting transparency in the administration of the petroleum resources in Nigeria. And I'd like to pause there to say that this is a work that has been really ongoing, and we remember the likes of Dr. Riwanu Lukman, who was then Petroleum Minister, who were involved in this whole work process of developing the PIB. Unfortunately, protracted years of delay and disagreements between the executive and legislative arms of government has hindered the passage of the bill into law. Over the years, there have been several attempts by past administrations to fashion out ways of streamlining the legislative procedures given the complexities and contentious issues associated with the bill. The most recent of this was in 2015, when the bill was broken into 4 parts to ease passage. These parts include the Petroleum Industry Governance Bill, the Petroleum Host and Impacted Community Bill, and the Petroleum Industry Administration Bill, and also the Petroleum Industry Fiscal Bill. On 25th of May 2017, the Senate passed the Petroleum Industry Governance Bill. And however, the PIGB is yet to become a law, as it still needs to be passed by the House of Representatives and assented to by the President. Now let's look at some of the key objectives of the PIB, which includes safeguarding the long-term macroeconomic stability of the country, reformation of the extractive industry institutional framework, provision of better clarity for Nigeria and its partners, particularly the international oil companies, entrenching a domestic gas-to-power market, increasing oil and gas production whilst protecting the environment and supporting the economic diversification agenda of the country. In order to achieve these objectives, some of the pertinent issues that the PIB seeks to address include the following: oil and gas royalties and taxes, which is part of our revenue aspect; regulations guiding production sharing contracts. For those of us that follow the oil and gas industry activities, the PSC contracts issues was reviewed recently. The dispute resolution between companies and the government, dispute resolution between companies and their host communities, which is part of the challenges we face in the Niger Delta Belt, removal of the fuel subsidy arising from the regulation of the downstream sector, which remains one of the big contentious issues in Nigeria's oil and gas industry. Clearly, the PIB is a critical market reform needed in exploiting the untapped potentials in Nigeria's oil and gas resources. Despite the growing adoption of renewable resources of energy, which may reduce the investment case for the oil and gas-related investments, we believe the passage of the PIB, particularly the Petroleum Industry Fiscal Bill, has the ability to attract investments that will stimulate government revenues, provide employment opportunities, and strengthen the long-term sustainability of the industry, which is very important for Nigeria. The current administration of President Muhammadu Buhari, who himself is the Minister of Petroleum, has shown some level of commitment and drive for enacting laws, given the passage of the 2019 Finance Bill, Product Sharing Contract Amendment Bill, which I said earlier, and the recently signed Company and Allied Matters Act 2020. Analysts are optimistic that the PIB may finally see the light of day. But that first has to come through a passage and agreement from the National Assembly, Senate, and the House of Reps before it gets on to the President. But like earlier highlighted, there are very important issues in the PIB that can really transform our oil and gas industry. For me, one of the big issues there is the ability to attract investments. Major global investors look at Nigeria's oil and gas market, but their concern is about the regulation. Deregulation from downstream and also the market reforms in the oil and gas sector that can make them put their money in and it's guaranteed. There is so much that can be done. Currently, we're seeing various refinery projects, modular refinery projects, for example, in Edo State, modular refineries, amongst others, even Imo State. We're seeing prospects for more investment in oil and gas free zones. For example, the one in the River State, oil and gas free trade zone, is really taking effect and is ramping up activities, providing access for logistics for oil and gas activities. That can also extend to other parts of the Niger Delta. We're seeing that prospect, and it's very important that this is taken seriously. Just to add that during last week, the Minister of State for Petroleum Resources, Mr. Timpre Silva, visited Rivers and Akwa Ibom State as part of his tour of Niger Delta critical states that have oil and gas investments. And both governors, Nyesom Wike and Governor Udom Emmanuel, made a case for effective collaboration between the federal and state governments in the oil and gas belt and investments that will transform the economic landscape. Also, peaceful coexistence between the oil and gas companies and host communities. So we believe that once the PIB is in motion, this can also help to catch in the contribution and activities of oil and gas producing states and communities, which is very important at this time to move the Nigerian oil and gas market forward, to create value and also ensure that oil and gas is translated to wealth creation and improved economic conditions for Nigerians. And there are learning points for us. Saudi Arabia today has been able to translate being an oil-producing country to a huge oil and gas market, creating value for the economy. Even to the point that a state oil company, I keep emphasizing this, Saudi Aramco has been listed in international markets like the New York Stock Exchange and the Saudi Exchange that are driving value and transforming the entire market, which today is a global player. That can happen to the Nigerian National Petroleum Corporation. And like we heard yesterday in the market review, this is one area that can be really addressed in terms of how it's unbundled and potentials unlocked. The Nigerian liquefied natural gas is an example also of how we can create value in the market. So it falls to that reform. It's very important that the PIBs are the front burner of the next level of reforms we want to see. We've seen the KAMA Act, which also has various views and contentions. We've seen the production sharing contract in the oil and gas sector. We've seen the Petroleum Industry Governance Bill, Finance Act. So the Finance Act also of 2019, these are interesting legislations that have been signed into law. The PIB, the big question is, when will Nigeria sign this bill? You can send your comments on the PIB, what you think about it, to our email address, to news@petroleum.com and hashtag AskWebTV. We'd like to get your views, what you think about the PIB, what needs to be done to make it pass into law quickly and signed, and how will it transform our economy. Let's get on now to updates on the oil and gas markets, both globally and continentally. First, for last week, oil retreated at the end of the week, previous week, on the more negative news from the U.S. labor markets. It's been a challenging time for U.S. like other economies in the world. Unemployment rates are increasing, growth rates are showing contractions, and we're seeing recession. So This is what the analysts across the world said: effect of crude oil price volatility and COVID-19 pandemic, twin shocks that will shake the global economy, is beginning to delve in, and we're feeling the impact. Oil prices fell back to a familiar trading range in the low $40 region. And according to analysts, with all the bullish headlines that has been seen over the last weeks regarding inventories, the inability to break higher does not bode well. That's Tariq Zahar, managing member of the Global Macro Program at Taich Capital Advisors, shared with Bloomberg. Now, crude fails to break to the upside, and you're in a contango market, so risk is to the downside. Metal markets surged last week on the Chinese stimulus. The copper prices surged to a two-year high at over $6,700 per ton, $6,700 per ton in last week. Other metals followed suit. The combination of monetary stimulus, a weaker dollar, and China's fiscal stimulus led to a surge in metals prices. Activities from OPEC showed inventories falling slower than expected. U.S. oil inventories declined again last week, the fifth time in 6 weeks. But the process will take a while, as the oil-producing exporting countries warned that the drawdowns are slower than anticipated, with growing risk of a prolonged wave of COVID-19. The slow pace underscores the fragility of the market. Also, OPEC Plus are offsetting could total 2.3 million barrels per day. The group of OPEC Plus producers that may need to compensate for past overproduction could cut by as much as 2.31 million barrels per day for 1 month. That is what we'll be watching. According to OPEC Plus calculations seen by Reuters news agency, if spread over more than 1 month, the figure will be smaller. So let's be watching if that will really happen from OPEC Plus producers. A major concern for those of us that look at continental oil and gas activities, particularly in Africa. We talked about the big project in Mozambique, the major liquefied natural gas project like we've seen in Nigeria. But the concerning story now is that it could face delays because Islamic militants seized a port handling key equipment supporting that project. The multi-billion dollar project is backed by Total Oil and Gas Company. Libya's GNA last week spoke about the ceasefire in Libya. Libya's internationally recognized government in Tripoli announced an immediate ceasefire, and the head of the government of the National Accord issued instructions that all military forces should immediately cease fire and all combat operations in all Libyan territories. The GNA also called for elections in March, that is coming up next year, and an end to the oil embargo. Hopefully, if this is really happening, it will help to stabilize oil production in Libya, which is one of the key producers of crude oil in the globe. Natural gas price surged, but drillers are not coming back yet. That's the update we had last week. Natural gas prices had a shot up to $2.30 per curves as a heat wave supply shut-ins and the LNG cancellations quickly tightened up the market. Hedge funds and other money managers have stepped up bullish bets, betting that prices will continue to rise. But Appalachian gas drillers are not returning on investments. Instead, they prefer a cautious approach. According to them, if you don't end up with a cold winter, the bull case for 2021 is pushed into 2022. Chief Operating Officer Chad Griffith told investors on a call. So we'll be looking at that LNG operations and the implications. This also applies to Nigeria, which has a huge LNG industry. And speaking further on LNG market, it's tightening after a substantial glut that saw dozens of U.S. LNG cargoes cancelled. The global LNG market appears to be turning a corner. That's the update from last week. Prices in Asia and Europe have hit multi-month highs. Goldman Sachs, major investment banker in the world, said that the TTF gas prices in Europe are on the rise and the rally could be sustained. Goldman said it expected the headwinds that had led to the U.S. LNG cancellations to disappear in 2021 as the global gas market moves to a more balanced setting. The bank stock with a Henry Hub forecast of $3.23 per scf and millibytes for 2021. Meanwhile, the Bank of America largely agreed and put out a JKM, that's Asia LNG forecast price of $6 per scf by December 2020. We'll also see how this will impact our own Nigeria liquefied natural gas activities. And we just talked about them earlier. Saudi Aramco, the state oil company of Saudi Arabia and major player in the global oil and gas industry, has suspended its investment in Chinese refinery. Saudi Aramco suspending this investment, which is a joint venture developed a US $10 billion refinery and petrochemical complex in China amidst capital expenditure cuts. So because of its capex cuts, it is not going to look quickly at that investment in China. This is just showing you how the whole shocks globally are affecting oil and gas investments in this period. Well, if you talk about renewable energy, we're facing those challenges too. Electric trucks could put a dent in emissions. California recently approved regulations to mandate the increased use of electric heavy-duty trucks. That has been a big regulation. California is one state that has been supporting renewable energy activities in the US. So this means that a lot will be happening in terms of emissions. California is looking at that regulation to mandate the increased use of electric duty heavy trucks and also speed up operations in that state. So that definitely is one interesting story and updates that we have from the international oil and gas market has been impacted this period as we continue to watch how the COVID-19 pandemic is impacting activities in the oil and gas industry. This will reduce oil consumption in California to the level of 17%, that's 16 to 17% by 2045, and that's a very huge plan from the California state. Well, when you look at Wall Street, America's big financial capital market space, it's looking at the General Motors to spin off its EVs. That's Deutsche Bank said that if the General Motors, spun off its EV business, it will immediately be valued at $15 to $20 billion and could potentially be worth up to $100 billion. According to them, spinning it off essentially creates value. It could unlock a massive amount of value if it looks at that renewable electric vehicle operations. So according to Memo Rosner of Deutsche Bank, a Deutsche Bank analyst, the less General Motors retains of the electric vehicle operations, the better it will be for value creation for the company. So that shows you how companies and banks are beginning to align when it has to do with sustainable renewable energy. Well, this is one of our touching news. Offshore rig service company files for bankruptcy. That's Valaris PLC, a London-based offshore drilling contractor, filed for bankruptcy last week Wednesday. The company warned of a prolonged contraction in the offshore drilling activity, and that's what we're seeing globally, even affecting Nigeria. Premier Oil is going to raise $530 million to cover its debt. It's seeking about $530 million from shareholders as part of a $2.9 billion refinancing effort. Premier will use $300 million to pay down some of its $2.4 billion debt profile just to achieve some sustainability in operations. And two tropical storms are heading for the Gulf of Mexico. We'll be watching that this week. The twin storms are aimed at the U.S. Gulf Coast, potentially threatening offshore oil platforms, as you know, and onshore refineries and processing facilities. Definitely that will have an impact on U.S. oil and gas operations and even in North America. And then while we're discussing around the challenges in the oil and gas market, there's also a period of discoveries. And Turkey has announced that they've discovered gas in the Black Sea. Black Sea now has gas prospects. The Turkey authorities announced a significant natural gas discovery in the Black Sea, which could cut the country's energy imports if developed. This area is a natural gas finding in the Tuna 1 well, a source from the Turkish government shared with Reuters news agency. The expected reserve is 26 trillion cubic feet, or 800 billion cubic meters, and it meets approximately 20 years of Turkey's needs. However, the source said it could take years to bring online. I mean, when you discover gas like that, you have to also ensure that it is processed and the plans are in place to develop it to value that can be accepted into the market. So that's interesting, despite the challenges we're facing in the market, there are prospects for gas discovery in Turkey that can cover over 20 years of demand. And speaking about demands, you know that Nigeria's major buyers have been China and India, and that has been part of our challenge as a country in this period of volatility and instability. That demand has been on a low, and we'll be watching out for the next quarter reports on trade for Nigeria, which will be important to see what was the volume of purchase of our products, particularly crude oil, in this period. Also, just to bring you some additional perspective of what's happening in the oil and gas industry, we're getting some signals from Akwa Ibom State of a prospective oil and gas free trade zone that's going to cover areas like Ottoabasi in Akwa Ibom State, Eastern Obolo, amongst other axis local governments in that area. And what is this going to be doing? It's going to be a free trade zone, majorly focused on oil and gas activities, with Black Rhino as a major investor in that project. That about $10 billion project is going to create over 7,000 jobs, and it is being touted as the biggest oil and gas free trade zone in West Africa if completed. So that is one very interesting project to look out for, which of course has a lot of cooperation between the Akwa Ibom State government, with Governor Udom Emmanuel leading the state, and of course the managing director of the Nigerian Oil and Gas Free Trade Zone Authority, Mr. Umana. Also the Minister of Industries, Trade and Investment, Otumbani Adebayo, representing the federal government, and of course representatives of Black Rhino Group. So we'll be monitoring that particular news story and seeing how that comes to fruition. Also, we watched the interesting development of the berthing of a big Maersk cargo ship that brought in a lot of goods into the eastern zone of the Nigerian ports, and that's in One. This has been part of the agitations in the country that the eastern zone, that's the southeast, south-south axis, should be utilized in terms of logistics and port activities. Now we're beginning to see those prospects, and it would be nice if the Nigerian Port Authority, Nigerian Shippers Council, and Ministry of Transport work and collaborate effectively to ensure that the eastern port axis is assessed and leveraged, considering the need for improved logistics across the country. We've leveraged the western port, particularly the Apapa port, for a long time, and its service capacity has been stretched. So those are good prospects, particularly as it has to do with the oil and gas market activities. Also, like we said earlier, we've been monitoring the developments around the refineries. Modular refineries were earmarked in this administration, and we had investors. It's important to see how these modular refineries are coming on board and creating value. And don't forget the biggest refinery project in sub-Saharan Africa, the Dangote Petrochemical Refinery, is still in the process. And of course, we are watching for the first phase of the commissioning, which should come soon, and how that will create value to the Nigerian industrialization activities. This refinery is a huge project and a bullish project of the Nigerian industrialist and businessman Alhaji Aliko Dangote. That's one story we've, in various occasions, covered and been there to see how the refinery project is. And subsequently, in our special Tuesday edition that looks at oil and gas updates, we'll bring a special insight into what is happening in that industry, which has been commended by various stakeholders in the country, policymakers, even state governors, as a project that will transform Nigeria's socio-economic landscape, provide new jobs, also enable Nigeria to save more in terms of foreign exchange and provide revenue to the government. And talk about revenue, that's something huge in the minds of our government. And we also understand that in this period, the issue of royalties and taxes to federal government has been discussed extensively. We would like to see more fiscal restructuring for the states that produce crude oil. We need to see more understanding in terms of them being able to manage more of their resources to transform their states. The Niger Delta states are producing, and we're getting so much revenue from them, but we need to also see the impact of those revenues in the states of those communities. And this again brings to the fore the activities of the Ogoni cleanup activity. This is one community that has been a vault of oil production, Shell and other oil companies. But how the whole process of the cleanup is managed, which should be a template to how oil and gas companies should engage communities. Because oil spillage disrupts the lives and communities of the people, agriculture and other things. And so we would want to call on the federal government and all stakeholders involved to expedite action and ensure that that cleanup is given the necessary support and financial support and technical support required to ensure that Ogoni cleanup is a success and a template for engagement between oil and gas companies and the communities. If that happens, it gives credence to how we create value from where we get source of crude oil production. That's very important, and that's the way we drive a prosperous, industrialized nation that works for everybody. And that will be a wrap for the Economy and Politics show. It was nice discussing the oil and gas updates, giving you the perspective on the growth figure, minus 6.6% growth, contraction, which also led to the contraction we have in the Nigerian economy at large. The prospects for growth, the PIB is one area that you can sign that bill, could transform the oil and gas markets. And from the international updates and continental updates we have, we're seeing the challenges with the LNG markets, production, investments, which shows a time for more innovation and partnership. Like, we're happy to hear some investment stories, particularly in Niger Delta region. So we'd like you to send your mails and comments on the oil and gas updates to news@proceng.com and join our website www.proceng.com to watch our new videos, read our news stories and analysis. If you log on to our website and go to our search bar, we have the oil and gas segment where you can get all the stories that you need for research, for reference in ProShare. That's your leading financial information hub in Nigeria. Don't forget that by 10 a.m. we'll have a conversation on the Nigerian financial and capital markets related with the economy, and we'll be looking at prospects for the impact investing in Nigeria and Africa. To come your way again, thank you for watching. Have a nice day and stay safe.